Hey guys, so today we'll be working on a momentum strategy, and the theory behind it is we're going to choose a number of assets, maybe 3 or 4. We're going to look at their 60-day momentum, and then we're going to hold them for 4 weeks, and then keep rebalancing every 4 weeks. So the first thing we need to do is require some packages, and then we're going to create a new environment. We're going to work with a couple of tickers. These are all random, by the way. So I'm going to get the data from Yahoo Finance, starting from 2003. I'm going to send it to the new environment. This line is going to combine all the adjusted closes and put them together. And then run these lines. So we take a look at the last couple rows of our data, and we see that the data actually cuts off 6-3. So we're missing a day of data. So to compensate, I'm just going to call get quote to get the latest quote, and then I'm going to R-bind that quote into our XTS object called price, or PRC. So if the last index of price does not equal our date today, then we're going to call get quote. And then I'll combine it with this PRC data. Since we're using R-bind list, I need data table. So hopefully this should work. Now we take a look at the bottom of our table here, and we see that we have a quote now for today's date. Next, I'm going to get a character vector of the tickers we have, and I'm also going to change the column names of our data by dropping the dot adjusted. So now we have a character vector, and then our header names have also changed. Next, we're going to calculate the momentum. So I'm going to calculate the momentum in the last 60 days. To get rid of all these NAs, I'm going to start this momentum table to a later date. And I'll do the same for our price data. So we'll go ahead and run these. Now I'm going to create a date vector spread out by 4 weeks, and these are going to be our rebalancing dates. So we'll start it at 2003, 331. We want a sequence of 300. They'll be 4 weeks apart. So we'll take a look at our Momo here. And this is momentum done daily. And I only want momentum every 4 weeks. So I'm going to extract the momentum every 4 weeks using these index dates instead of the daily ones. Now they're 4 weeks apart. I added this dimension, so we have 10 columns by 201 rows, but sometimes these dates fall on the weekend or they're a holiday. So what I'll do is create a second index so that if this date can be found in our momentum data, I'm just going to add a date and get that date instead. So now I'll use the second index instead and get the dimensions. So now we have more rows. Do the same thing with our price data. And then our dimensions should be the same. Good. Now I'm going to make a combination vector. So basically I'm just going to make combinations of tickers so that we could apply the momentum strategy to those 4 tickers. So we'll run this line. We'll take a look at our assets here. So I'm going to iterate through each column here, and then I'm going to find which combination yields the best results. Now we're going to build a function to calculate the returns of each combination. So we're going to use this function as an iterator. For x, we're going to throw in a number anywhere from 1 to the length of the columns, and it's going to select a unique combination, and then we'll do our calculations from there. So this line here will get the tickers. This line will get the momentum of that combination. So as an example, we'll use the first iteration. So the first combination should be these 4 tickers. We run this line. Now we get the momentum for those 4 tickers. Now I want to select which row has the highest momentum, and I'm going to long that asset. So this line will take care of that. So here I'm going to be using apply for each row, and I'm choosing which is the max. Now we get a nice sequence of which asset returned the highest momentum for each row. Now we're going to calculate what the returns are for each asset for that time frame. And we're rounding that to 2 decimal places. So I'll store the returns here. So next I'm going to use a sequence to find what column returned the highest, and I'm going to return that asset's return for that period. So I'll use do call, merge, So if the sequence equals the asset column, I'm going to return a 1, else I'm going to return a 0, and then I'm going to multiply times the return of that particular asset, and then I'm going to lag that signal. So here I'll run this. Take a look at our all. So out of the 4, the signal picked the first asset, and it returned that asset returned for that particular date, and then so on and so forth for each row. Next, I'm going to change the column names. And then I'm going to replace all the NAs with 0. So we'll run these 2 lines. So now I want only 1 vector of returns instead of the 4 columns. So what I'll do is I'll get the equity here. I'll extract the returns by summing the rows of all. And then if there's any NAs, replace those with 0. So now we have 1 vector of returns instead of the 4 columns. I'm going to change the column name. By separating the ticker names with a hyphen. So here it's just PRC2. We'll use collapse by hyphen. And then finally, just return equity. Alright, so we'll run this function. So now I'm going to apply this function to all the combinations of assets. We'll run this line. Great. So now we have equity curves for all combinations. Next, I want to get the total return of each combination. So we'll use column sums. Store it in AAA. Since we have 210, I just want to extract the top 10 to view. So I'll go ahead and order this strat list by using the following. So now these are ordered, and I'm going to extract the top 10. So now we have a list of 10. Now I'm going to combine these. Now we have an XTS object. So we'll go ahead and create a plot. Format the legend to make it a little bit smaller. I'm going to use a color set. Should it be geometric? Set this to true. And then our title will just be top 10. So we'll run this line. Awesome. We can do table stats. To get descriptive data of each. But we can also use a risk return scatter plot. add a Sharp ratio of 1 for comparison. I'll add in a risk-free rate of 3% annually. Use a color set, rich 10 equal. So we'll go ahead and run this. So I'll change my Y limits and X limits. So we'll change our X limits to 0.45 to 0.55. Our Y limits, change that to 1 to 1.5. Looks like they're higher, but not too much. So now we have a risk return scatter plot. Now I'm going to extract the column sums of the top 10. I'm going to use AAA to find which is the highest returning combination. So out of our combination, it turns out these 4 stocks returned this much since 2003. So now we're going to extract the returns. And we're going to make a chart. So we see this is a nice looking chart. So the worst drawdown it had was back in 2008 of almost 30%, and then it did pretty well in 2020. So far it's been doing well. We can also get some stats. So here we have 223 observations. Didn't find any NAs. The minimum return was negative 17.5. Our median was approximately 7%. Our geometric mean is 8.5%. And then the highest return was 100%. Here we have a standard deviation of 14.20, so it all looks well. We can also get a table of drawdowns. So we see that the worst drawdown took approximately 7 periods, and our periods are 4 weeks, so roughly 28 weeks to fully recover. Alright, so we're gonna kind of copy this function here, this Momo function, because as of now, during this backtest, we only extracted the equity returns of this combination, but I want to extract the prices, the sequence, and the return. So we'll kind of tweak this function a little bit, call it something different, and here instead we're going to pass in the ticker combination. So we'll go ahead and delete that line, and instead change it to as character str split x by hyphens. Extract the first. Next, I'm going to change the column name here. Just name it something different. And instead of returning equity, I'm going to return prices, the sequence. I'm going to round equity to 4 decimal places. So that should take care of that. We'll go ahead and run this. we're going to extract that data using this function here that we just created. We'll separate the tickers with a hyphen. So we take a look at our data, and now we get a combination of the asset prices, our sequence, and our return. For this last row, it says we should have opened Amazon at $24.71 and the market closed at $24.60 for Amazon. So it's a little on the downside for this period so far, but it's just been a couple of days. Alright guys, so that's how we apply this momentum strategy. Again, you can pick any tickers here and then just rerun this and get your results. As a disclaimer, of course, past returns are not indicative of future returns. So even though this looks great, it does not guarantee future returns. Alright guys, let me know what you think down in the comments. If you have any suggestions or questions, please let me know. And I'll see you guys in the next video.